going to be breaking down GU trade results for this week, right? I took a lot of trades, and some of them were losses, some of them were wins, some of them were break evens. But all in all, it was a beautiful week in the market. So this is Monday's trading on GBPUSD, and this is the 15 minutes time frame. So you can see that there was basically no entry right here for me, right, based on my model. So I just waited patiently. Tuesday, what I saw was this. Okay, so price swept out a low, tapped into an area of interest, right? This other block. So we'll be taking things off as we continue to go, and then we broke structure to the upside. You can see that we broke structure right here. So I took my entry off this fair value gap. That was against my plan, right? Usually after the sweep of a low and break of structure, this is the New York key zone, and we usually bring out a Fibonacci retracement tool. So from here to here, and first of all, let's just talk about what just happened. Okay, so price swept the high, right? It broke above the high, returned back into premium or into discount rather, and then we broke structure to the upside, and I was in this trade already, right? So upon the creation of this leg that tapped into this other block, breaking this high once more, I moved these trades to break even, right? This is not supposed to be lost. I moved this trade to break even, and I entered a new position targeting just 2R. So I expected these trades to play out perfectly well. Well, it actually did. Okay, so I moved these trades to break even, and upon the creation of this leg, I entered on that position here, targeting the same highs for 3.39R. So together it will have been a 3.39R plus the 2R for this trade. But unfortunately, you can see price stopped me out and took me out for a loss. Now, what I should have done instead, if I was following my plan, was to enter using a Fibonacci retracement. So upon the sweep of this low, that is a sweep, we had a break, and the retest is where we would have entered our OTE level, right? So this is where we would have entered this trade, stop loss at these lows, and you can see that stop loss at these lows, and you can see that 2R is just about this level, right? So we would have easily backed 2R on this trade if we had entered at this level, right? So although maybe we would have entered on that position here, but at least we would have backed 2R, and the second trade would have been a break even perhaps. But however, this was a -1R trade, right? One loss here and one break even here. So going into the next day, I dropped out to the higher time frame, and I saw that GU had created what you call an SMT, which is smart money technique, a smart money tool, whatever it is. It simply means that a difference, a divergence, right? So along these highs, GU fits to sweep this high, but on EU, this high was swept. So we'll go to EU soon, right? EU is up there. So this high was swept on EU, and we saw this break of structure, this change in structure right here. So obviously we're expecting a bearish week, and we didn't care about this. That's why I wasn't too enthusiastic about buying here, because I was expecting a bearish week. So when I saw this break of structure leaving behind this fair value gap over here, so this is a 1 hour fair value gap. I saw this fair value gap, and then I placed my entry just below the fair value gap. So at this level, price actually tagged us in. This was Wednesday, okay? Price tagged us in and started trickling down, okay? So before we got to our target, price made a retracement, right? But I also made an error here. Take note, we have taken one loss here, and this is the winning trade we have running. But on this day, I took a loss here, okay? I was physicated on the lower time frame. This was Thursday, and I failed to look above. So I dropped down to the 15-minute time frame, and I saw something. So I was expecting price to get to this low. Take note, we have trade, and I saw that the market was trickling up. And in the London session, I saw this trade, I saw this idea. Okay, so I saw the market sweep up, break down below, come back into this zone, and fail to close above this zone. So I entered on this level, expecting price to trickle down to my initial target. You can see what happened. Well, the truth of the matter is that the trend had not really changed. If you are looking at it from a professional perspective, right? From market structure perspective, rather, the trend had not changed yet. So the breaking structure would have been at these lows. This is the low that created this high, and these 2 weeks here were the one was the trap. The smart money set for me, because these 2 weeks did not actually tap into anything tangible here. There's no fair value gap here to support this week. Hence, this is not a higher low. And also, if I zoom out to the 1 hour time frame, if I zoom out to the 1 hour time frame, you can see that this is a fair value gap right here. This is a fair value gap right here, a 1 hour fair value gap in above this region. Also, this is from equal highs. So there were a lot of things that uh, we are not okay with that trade. But in the heat of the moment, I thought that they were actually fine, right? So you can see that price just gave a gentle sweep above these highs, and that's what actually prompted me. There's also a fair value gap, so I guess it's just one of those trades, right? So price disrespected, took me out for a loss, taps into this 1 hour fair value gap, then we broke this structure, right? This is now a valid break of structure, so we broke structure here, and when I saw this, I placed my entry here using a Fibonacci as usual. You can see that price did not tag me in, so this was a missed trade for me. It was a missed trade. I didn't enter this trade anymore, and yeah. So overall on GBPUSD, this was a break-even week, 2 arrow win, and -1 arrow losses, right? So